Hi guys, quick update here for YouTube. Hope everyone's doing great. It's Friday, 22nd of September 2023. So we're going to have a look at Bitcoin as well as the S&P. If you want to join the group, join any of the educational courses for those more independent learners, everything's there in the description below. We're going to start off with the SPX. As always, we'll go over the long-term count, what we think is going on, and then we'll delve into the short-term count. So, as you can see, we've basically been calling it a WXY. So longer term, we always start off with this. Obviously, these are not the charts which we share in the group. We're not able to share those here. We think it's an ending diagonal. We think we're still in a secular bull market, and this still has another, I'd say, 18 months to play out. And then we're looking at a top come 2025, 2026. We don't believe this is a 1-2 or a WX or an AB or anything along those kind of lines. And in fact, we're nearing the end of this correction. So we're going to come out of here rocketing here, I think, in Q4, Q1, next top around Easter, perhaps summer 24, then a bit of a, US presidential election, sell-off, maybe even retest this high, right, in an ending diagonal. Now, the textbooks will tell you the wave 4 has to cross into the 1-2, but it doesn't have to happen. So you can have a wave, an ending diagonal like this, okay? So this wave 4 sell-off, late 24, early 25, doesn't necessarily have to cross this. Obviously, we can go more into the short term as and when we need to. We're still, one year away from that. Then we're going to have the final blow off top, and then the single biggest stock market crash in human history, which will take us very, very low. So that's the long-term count. Always want to clarify that we are still in the secular bull market. Now, at the start of August, we identified a multi-week correction was coming. Now, this is where most retail traders probably lose a lot of the money, okay? Because this is quite difficult. There's a lot of chop, and by the time most retail traders have figured out we're in a multi-week, multi-month correction, it's actually time to do another one of these. Basically like this. Now, today's Friday. Is it likely to have bottomed today? No. Are we getting close? Definitely yes. So what did we say at the start of August? We said it was going to be a flat correction because we know S&P likes to do flat corrections. So something like that. We knew that was coming. It looks like an ABC to me, or a WXY. Very, very simply, we take the 1-to-1 with this, and that gets you to 4273, very close to that. We also said a tag off the 200-day moving average makes a lot of sense because a lot of retail traders and institutions buy and sell above and below this line. Why they would do that, I'm not too sure. You're better off just learning Elliott Wave and Fibs, really. So that's coming in at around 4193. So we're getting very close to the 200 as well as here. We also know there's an ES gap, which probably we filled yesterday. No, we still haven't filled this gap. So this gap probably is going to get filled too on the ES. So I think we're very close to a turn. They might drag this out into October. Ultimately, still a buy the dip market. And I think we're very close to that dip being completed. If it is a 3-3 or even a 5-3-5, you could say that's a 1-2-3. Maybe a little 4 is coming here Monday, Tuesday next week. One last dump. Tag the 200. Tag this resistance support level here around 41, 42, and then that's the X wave in, and then we're going to go higher. Okay, ultimately this time in October, so 22nd of October, let's say 1 month away, I can already see us charging and reversing this entire move. I'm not expecting a crash. I think we're very close to a turn, but they might drag this out until a minimum next week or into October, and so then it's the buy the dip opportunity there for the S&P. Now, I don't really think there's much to update there, really. So that's what we think is going on. We think this is a W, and we identified this weeks ago at the start of August. So very useful to be in the group for those more longer term. We are swing traders primarily, but obviously the long term count passively, this market is still bullish. I know it looks really bad, and it does look bad. And really, that should be a 1-2 coming down, but we're not quite ready for that yet. I'd say we're at least 18 months away. What do we have here? We got a 300. We got a 3-day, 200-day moving average. Okay, I don't know how that's popped up on there. What you can do is you can set this to the day, can't you? So rather than the chart. So yeah, there you go. Right. So regardless of what time frame I'm on, I've tagged the 200-day there. So it's always going to be there. and it's not going to move. Okay, obviously that was the 200-day on the 3-day chart, so it's a 600-day moving average. So makes a lot of sense. Makes a lot of sense. Get some more bearishness, and then we're going to go higher. But ultimately, we're looking for a turn here pretty soon. Okay, we're already 7 weeks into this correction. We said at the start of August it's going to last a couple of months, so no need to get too bearish down here. As we go into October, assuming it's not already bottomed, we're looking for it to rally. Frankly, we can make all-time new highs before the end of the year. I think the move out of here is going to be vertical in Q4, and that makes a lot of sense for a lot of reasons. Okay, good. Now, Bitcoin. So we've been long in the group for quite some time. You know, yes, there is a count possibly to get us lower, but it doesn't really matter, I don't think. You know, we're expecting Q4 to be very bullish and Q1 next year to be bullish. So this has made 5 waves down. It's a little bit messy, but it works. So 1, 2, 3, 4, 5. Last YouTube video was here somewhere. Obviously, we've reclaimed that level, formed a swing failure, formed a shakeout pattern. We've tagged some of these resistance levels. Yes, should it and could it have gone lower and tagged these lows? Yes, everyone's waiting for 23,800. If everyone's waiting for something, likely it's not going to happen. We identified this days and days ago. We knew the S&P was going to sell off, but we said when the S&P sell offs, it's not necessarily the case that Bitcoin's going to make a new low, because Bitcoin's a leading indicator. Often it leads first. Okay, so the S&P move is really just there to shake out Bitcoin holders. I mean, look at that. S&P's well below the low from the 21st of August, and Bitcoin is still maintaining its most recent lows. Okay, now how do we count this then? Is it impulsive? Well, to me it is. I mean, initially I was bullish just going off this move. I mean, we were dollar cost averaging into all of this. That's why, you know, you buy on red days, you don't buy on green days, because you lose money on the entry and not on the exit. So, you know, that to me looks like a 1, 2, 3, 4, 5. We teach this on the masterclass. If you're having trouble deciphering what's going on, just convert it to a line chart. Yes, it's a bit messy, but it works. It's a leading diagonal. 1. Which means all of this is a 2, right? So this can retrace anywhere into here. It's just a wave 2, and then we're looking to go higher. So to me, it's more likely that the lows are in. Now, even if the lows are not in, this is one of those situations where one would dollar cost average. Why is that? Because we're saying the S&P, as each day goes by, we're closer and closer to a vertical move. So even if Bitcoin makes a new low, which I don't think it will now, it's going to rally vertical, and to me that's the X wave in. So really it's quite simple. I mean, perhaps I'm simplifying it too much. So to me that is the W into here, and that is the X, right? This has also taken around the same amount of time, so there's time equality, right? Call it 21 bars, right? 21, 22 bars. So in terms of time, we've actually taken just as long as in this X wave correction than, you know, as we have done in the first move up, right? Because we don't believe this correction started in June. We believe it started in April, and this is an expanded flat of some description. Either way, long story short, we're looking at this Q4 rally, and we're looking at a pump going into the halving. I don't think there'll be a post-halving pump. If anything, it'll be the opposite. Halving is expected April, May. That follows my S&P thesis, where we're going to rally to around 5,400 by Easter off next year. So the next 6 months should be bullish, Q4 as well as Q1. Yes, is it moving with a lot of velocity? No. Has it made a new low though? No, it hasn't. Okay, so I'm looking at 44k over the next 6 months. We're pretty much bottomed, and I don't think it matters if it makes a new low. Just dollar cost averaging territory. Most people have missed the move, and that's usually when the market tends to get away from you. So fairly straightforward on Bitcoin there. Obviously the largest position is Solana. Best case scenario, this is going to 1,000. Worst case scenario, you know, $75. Now, we've caught Solana twice at the end of last week of last year, here as well as here. And now we're long again. And here, short term, for those who look at patterns, it's forming an inverted head and shoulders. But it was dollar cost averaging territory the minute this happened, right? And you want to buy on red days. We've been dollar cost averaging throughout all of this. That's a huge cup and handle formation there. And you can count 5 into here. right? Once you can count 5 into here, why should Solgado make a new low? Why? It doesn't make any sense. You know, there's too many people looking at this because it might go to 1,000 because of the Ethereum fractal, right? So that's the best case scenario. Worst case scenario, it's going to 75. So how do you take advantage of that in a rising market? Well, you stake the coin. Staking is like dividends, isn't it? You get paid in Solana. It doesn't work. Staking doesn't work in a falling market when you're getting paid in an asset that's depreciating. But what if the asset is appreciating? You're getting paid in Solana at the current rate, but we're saying Solana might be worth $75 per Solana coin. So the staking interest rate, let's just say hypothetically, is 5.5. You're not really getting 5.5. You're getting more like 10.5 or even 15.5, depending on how bullish you are. I think as a minimum, this gets towards 75. That's a 3x move from here. This is our largest position and it's our favorite altcoin. And I think there's nothing more to be said on Solana. And I know a lot of people are waiting for, you know, some kind of range breakout to the downside. Once again, it is possible, right? Everything's possible. But then it comes down to how bearish do you want to get on the S&P? You know, how much lower really is the S&P going to go? I mean, frankly, the S&P could turn today. I don't think it will, but it could easily turn today because it's taken out the August low. So, you know, we know the S&P is going to vertical rally. One of these days, the next couple of weeks, it's going to be vertical. Why would Solana do this? We're saying S&P is going to make a new high. We're saying Bitcoin's a risk asset. So, and if Bitcoin gets to 44k, forget about the S&P, Bitcoin gets to 44k, just doing the maths, you know, surely Solana, even if its BTC price doesn't move, can easily get to run these stops above here. So this is at 38, this is at 49, and that's what we do in the group. We identify the best looking chart, the best coin with the best fundamentals. Ideally, we're not fundamental experts, of course, because you don't need to be, but you want to go with where you know a lot of the FOMO is going to start. So I think Solana is better to be dollar cost averaging here rather than assuming it's going to make a new low. Everyone's assuming a new low. It's not going to happen. I mean, you've got an inverted head and shoulders here too, haven't you? I mean, we've just mentioned this, haven't we? So just this gets you roughly a 1-to-1. Let's just do the neckline from here. That gets you towards 23. Once again, that's the logarithmic 1-to-1. I'm taking this distance and basically copying and pasting it onto here, but I'm using the fibs, right? That's how I get 23. But there's a much larger inverted head and shoulders going on. Where's that? There's a much, much larger one going on, which is this one here. Technically, this is an inverted head and shoulders too. Once again, convert it to a line chart. You can't really see it on the candlestick. Left shoulder, inverted head, right shoulder. Right? So you can see, you copy and paste this onto here. Once it breaks this neckline, that's what we're saying, right? I mean, that gets you towards 89. Obviously, I've just done that by hand, freehand, but you can see why 75 is very much possible. There's a huge head and shoulders going on here from basically 1.5 years ago. This. Anyway, I think we've explained our thoughts on Solgado there. So, yeah, never a good idea to be too bearish after a 6-month correction. Probably not going to make you any money. Now, finally, we'll cover Ethereum whilst we're here. So I would say I'm constructive on Ethereum. Obviously, a larger crypto rally in Q4, which is seasonally an optimistic time for crypto. You know, you'll probably get a rally here too. I don't think the chart looks as good as Solana. I think if Solana is the new Ethereum, really, but you could read that as an ABC, a completed move into here, and so you can get another little ABC potentially. I think this can get to 2k easily, maybe to even 2.5k. I think that's very much possible if Bitcoin really gets moving here. Once the S&P is done its silly little sell-off that it's undergoing here for various reasons, which we're not going to go into here. You know, once that's done, then we'll we should be able to get bullish here for risk assets. S&P new high, Bitcoin 40k at least, and then Ethereum should be able to get to 2k. But I think there's better opportunity elsewhere if you know where you're looking. So that's it really. Not really much else to update here. So if you want to join the group, you know what to do. Various educational courses for those more independent learners trying to figure out where the market is going yourself, and you need that little helping hand twice a week. Obviously we are there with the group videos. They are, 30, 40, 50-minute updates. You take group requests as well. Obviously we cover the whole of the stock market as well as crypto. Wherever there is alpha to be generated is going to get covered. Anyway, those are my current thoughts. I don't think it's worthwhile getting too bearish down here. There's no point. Solana looks really good, I think, and Bitcoin eventually, once the S&P is done, and really it's an S&P story. I mean, this is where most of the money is situated. So once this sell-off, and it does look pretty bad, but we've done what we had to do. As a minimum, take out these lows. So this could rally at any time. So I don't think it's worth getting too bearish down here. Once this gamma switches from a negative gamma to a positive gamma, everyone's going to close all their puts and go long again. And then, that could very well, I suppose it could be a W, X, Y, another X is coming, then another Z, then we drag out the X. It doesn't really matter. You're in the territory now where, passively long investors who have been dollar cost averaging into here, likely they're adding to their position. Assuming that they're seeing what I'm seeing, which is that we're going to get a Q4 rally. And I think there's more evidence to suggest, 5,400 by next summer than there is to suggest that this is the start of some major crash, which I don't think it is. I think a tag of the 200 will be welcomed. They could turn it into a double combo. So rally it up out of here, then knock it back down in October, form the October wick, get things nice and bearish. Because I don't think yesterday was peak bearishness, to be honest. Looking at the financial media, then they'll just rally it up. So either way, it doesn't really matter for more passive long. This market is still secular bullish. It's the only way to make sense of what you're seeing because everything is so corrective. Yeah, everything looks so corrective, right? You can't tell me there's any real impulse there. Frankly, there's not been a real impulse since the first YouTube video. Everything's been in a large correction. So if everything looks corrective but it's still going up, it has to be an ending diagonal. There's no other way to make sense of this. So this can't be a 1, 2, 3, 4, 5. It just doesn't look like one. If it was a real impulse, we would already be at new highs, but we're not. We're operating at an angle of about 45 degrees here. Let's just do a line of best fit. So the target here is 6. Well, on the SPY, it's it's about 6,607, 6667 or 6669. So, that kind of angle, what is that? 45 degrees, is it? What's the angle on that? Yeah, 34 degrees. How is that an impulse? Impulses usually have angles of well above 45. They're more like this, aren't they? This started off as an impulse, so maybe not 55, but they look something like this. Anyway, that's what I think is going on. I still think we're secular bullish for at least another couple of years, and then after that, you're going to see something very impulsive, except it's not going to be to the upside.